Hi everyone, my name is Moe and welcome to another video of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that investing comes with risk. No matter how safe an investment sounds, there are risks involved. Understand that anything you hear in this video is for information and educational purposes only. To read more about risk involved when investing, please see the description below. When pandemic first began, it became very clear that there are going to be certain sectors that are going to take the biggest hits. Travel industry was one, entertainment industry was one, restaurant industry was something that everyone was talking about, who will go out to eat when the government literally says you can't leave your home. So, there was a lot of confusion, and one of the sectors that took the biggest hit was entertainment industry. Places like casinos, museums, entertainment complexes, spas, concerts, concert venues, and other related things. Today, we're going to be talking about a high yield income stock called EPR Properties. They're traded on New York Stock Exchange under symbol EPR. They took a big hit when entertainment industry was being questioned during the pandemic years, but it could experience significant growth in coming years as global economy is reopening and things are going back to normal. John?
Yeah. Now with the economy reopening, people are getting out and doing things, and that's exactly what EPR Properties does. They're the leading specialty real estate investment trust, or REIT, that owns experiential properties. And experiential properties are, as we'll soon see, things that people do to go out and experience things. So right now, the company has a $6.7 billion portfolio made up of 363 locations and more than 200 tenants in 44 states in Canada. Its portfolio consists of approximately 20 million square feet, of which a whopping 98% is leased, and includes a total of 85.85 million of property under development and 20.2 million in undeveloped land inventory.
And John, you mentioned, let's go into this. What are experiential properties, if you can explain a little bit?
Yeah, it's probably easy just to give you a rundown of what EPR Properties portfolio consists of.
Yeah.
Theaters. It owns 172 properties, which are responsible for 41% of revenue. Contractual cash revenue. Eat and Play. It owns 56 entertainment properties, which are restaurants, golf, bowling, etc. And that's responsible for 24% of revenue. Attractions. It owns 23 water and amusement parks, 11 ski resorts, 7 experiential properties, which includes indoor water parks, recreational and leisure, 1 gaming property, casino. It also owns 3 cultural properties, but cultural is pretty general, zoos, aquariums, and a museum. It also owns 16 fitness centers. And on the periphery, it also operates 9 private schools and 65 early childhood and education centers, but it's slowly trying to phase out of the education business. They're always growing too. In the first quarter of 2023, the company spent $66.5 million on investments, including $46.7 million for a newly constructed Vital climbing gym in Brooklyn, New York. The company has also committed an additional $245 million for experiential development and redevelopment projects, which is expected to be funded over the next 2 years without any need to raise additional capital. Going forward, the company's strategic focus is to reduce its interest in its theaters, early childhood education, and private school properties.
John, you mentioned they're growing, but let's talk about their financials as the economy is opening and things are actually going back to normal. How are their financials looking?
Yeah. They reported great financial results in 2022, with that momentum carrying into 2023. This includes total revenue in the first quarter increasing around 9% year over year to 171 million. Net income climbing 42% to 51.6 million. All important funds from operation, as adjusted, climbing 11.7% to 96 million, or $1.26 per share, and adjusted funds from operation were up 12% at 98.7 million, or $1.30 per share. In addition to regular collections during the first quarter of 2023, EPR collected 6.5 million of deferred rent customers and 0.6 million of deferred rent from accrued basis customers. This leaves only 1.5 million of deferred rent receivable remaining on the balance sheet as of March 31st, 2023.
Oh, very interesting. And I know the stock market is a forward-looking animal. Investors care about what's ahead and pay very little attention to what could be, what has happened already. How does 2023 look for EPR Properties?
It's not all fun and games at EPR. They didn't actually provide any guidance for 2023, and that's for an important reason. Back in September 2022, Regal Entertainment Group filed for bankruptcy protection, and Regal leases 57 theaters from EPR.
I see.
And then this past April, EPR entered into a restructuring support agreement with Secured Lenders Holdings, most of Regal's outstanding secured indebtedness. Regal has announced it expects to emerge from bankruptcy case by mid-year, but given the complexity of the case, there's no guarantee that everything will go smoothly with the bankruptcy case. On top of that, Regal owes EPR a pretty significant amount of rent deferral from the COVID pandemic, and there could be no assurances that how much of that, if any, the company will recover. That said, Regal's future remains uncertain. It's important to remember that EPR's earnings continue to be strong, with Regal having little impact on the company's bottom line. Again, going back, first quarter adjusted funds from operation were $1.30 per share, up from $1.16 per share a year earlier, and well above the $1.23 analysts were calling for. Even investors seem relatively unfazed, with just 4.9% of the company shares being shorted. So most people don't expect any sort of correction. But that doesn't mean there's ongoing concerns. There are. No one wants to lose tenants, but it's not as big of a concern as people are making it out. But because of this uncertainty, EPR isn't providing 2023 guidance, though it did reiterate, and I think this is important, it has a strong balance sheet, and it reconfirmed its 2023 spending guidance range of $200 million to $300 million.
Are their dividends hurt by this, or how are their dividends looking? If you want to explain a little bit more.
Well, it shouldn't be a big surprise that the dividend took a hit during the pandemic. They suspended it, which makes sense because their entire industry was gutted.
Right.
But despite it, fast forward to today, despite the ongoing uncertainty, the company's dividend policy remains solid. In the first quarter of 2023, it declared a dividend of 0.275 cents per share, or $3.30 on an annual basis, for a current yield of 8.05%. Keep in mind, in order to qualify as a REIT, a company is legally required to distribute at least 90% of all its taxable income. When it comes to REITs and their dividend payouts, the important thing to look at is adjusted funds from operation, or AFFO. That's the measure of true cash flow. The company's first quarter AFFO was up 12% at $98.7 million, or $1.30 per share. That's more than enough to comfortably afford to pay its quarterly dividend of 0.825 per share. That said, there's still lots of room for growth. Before the pandemic, the company raised its dividend just before the pandemic to 0.3825 per share. But then again, the pandemic happened. It suspended its dividend until July 2021, and it reinstated at 25 cents. Again, it has since increased it to 0.2750 per share. It still needs to climb roughly 40% to get back to its pre-pandemic levels.
How is EPR stock price doing? Again, remember, when we're looking for dividend plays, we're not just looking for high dividend. We're looking for some stock that could provide, stability as well. Because if stock plummets, 30, 40, 50%, and you're still getting the same dividend really means nothing.
It wasn't just EPR's dividend that was at record levels. Its share price was too, just before the pandemic. But then the pandemic came and they both cratered. Its dividend has since rebounded. Still has some room to go, but it's rebounded. And so is its share price. It's up, but it still needs to climb about 65% to get to its pre-pandemic levels. But Wall Street is pretty robust, or bull EPR share price, with a 12-month trading range guidance of $45.33 per unit to $47 per unit. This points to potential gains of 7% to 12%. This might not seem earth-shattering, but it's far better than some analyst calls for the S&P 500 to fall anywhere from 20% to 45% this year. So the share price is doing quite well.
Just to recap, we talked about EPR Properties, traded on New York Stock Exchange under symbol EPR. It's a great REIT with a growing and diversified portfolio, experiential properties. It reported strong 2022 results, and 2023 is looking very promising as well. While the company faces some uncertainty, Wall Street is bullish on the stock, and time will tell how it goes. But it could be a great dividend play for those who are looking to invest in the long term. Thank you so much for watching this video. We'll be back soon. Don't forget to like this video and subscribe to our channel.